Good morning, traders, and welcome to BCI's morning market analysis. First up, let's talk about the US dollar. The DXY held near 99.1 on Wednesday, staying close to its highest level since early December, as the latest US inflation data failed to alter expectations for the Federal Reserve's policy. US CPI came in largely in line with expectations, reinforcing the view that the Fed is likely to keep rates unchanged later this month. Underlying price pressures showed signs of easing, with core inflation at 0.2%, below the expected 0.3%, limiting further upside in the US dollar. From a technical perspective, the short-term trend remains constructive, with the dollar index trading above both 200-day moving average at 98.73 and the 50-day moving average at 98.97. MACD has turned positive, signaling waning downside momentum, while the RSI near 61 suggests neutral to strong conditions without signaling an overbought market. On the upside, a break above 99.32 could open the door towards 99.82, while key support remains near 98.44. Next up, let's have a look at crude oil, one of the hottest markets right now. Crude oil, WTI, hovered around 60.3 per barrel near a 12-week high as markets priced in heightening geopolitical risks. Investor focus remains on escalating tensions involving Iran following President Trump's decision to cancel talks and warn of potential 25% tariffs on countries doing business with Tehran. Unrest in Iran threatens roughly 3.3 million barrels per day of oil production, adding to supply side concerns. Further supporting prices, attacks on oil tankers near the Caspian pipeline's Black Sea terminal disrupted Kazakhstan's crude exports, compounding delays caused by winter weather and infrastructure damage. While prices above $60 largely reflect a resurgence in geopolitical risks premiums rather than improved fundamentals. Short-term momentum remains positive. Technically, WTI continues to trade above short-term moving averages through resistance remains heavy around the 61 to 62 zone. A failure to break above this area could see prices retreat towards $59 with a deeper pullback exposing 57.5. Next up, let's have a look at gold, which surged to a fresh record high near 46.43 per ounce, driven by increased expectations of US rate cuts and renewed safe haven demand. Recent data showed easing underlying US inflation, strengthening the case that price pressures are gradually cooling. Rate futures now reflect investors' expectations for two to three Fed rate cuts this year, exceeding policymakers' median projection. Concerns over the Fed's independence resurfaced after US prosecutors launched a criminal investigation in Chairman Powell's testimony, while geopolitical risks intensified amid fears of potential US intervention in Iran. From a technical perspective, gold remains firmly in an uptrend with key moving averages sloping higher and momentum indicators staying positive. RSI has eased from overbought levels, suggesting possible short-term consolidation. But still, the broader bullish structure remains intact, with psychological levels at 4650 and 4700 and 4750 now in focus. Lastly, let's have a look at the Australian dollar, which traded near 66.85, close to a 2-week low as markets reassess the likelihood of a February RBA rate hike. The probability of a near-term rate hike has fallen to around 27%, down from last week following softer November inflation, weaker consumer demand, and modest decline in job vacancies. Expectations for a May rate hike remain elevated at 76%, with strong household spending still posing upside inflation risks. Technically, the Australian dollar faces immediate downside pressure near 66.59, with further support around the 66.60 and 66.32 zone and the key psychological level of 66 cents. On the upside, a recovery could see the pair retest 67.25, followed by 67.66 and the psychological level of 68 cents. The momentum indicators continue to support the broader uptrend despite some near term caution as RSI has gone down towards the mid 50s. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.